Hey guys, so obviously the Fed news came out today. Everybody was waiting on it. And boy, the market did not like the release at 2 o'clock. But the big question was, could Jerome Powell step to the plate and hit another dinger? Could that silver-tongued fox pull another one out? And you know what? He did it. I don't know what's going to happen tomorrow, but for the day, Jerome Powell stepped up, didn't even sweat. Boop. Hit a home run. Market just went. As soon as he got there and started, just yapping, right? Just pulling it out, smooth, calm, right? What the market wants. They didn't even notice it. I'm gonna have a little fun with this. I'm gonna show you the chart. I got two of them. One, when the release came out, by the minute, I sped it up 20x, so it'll go through in seconds, right? What would take normally 30 minutes. And then I got another chart shows you when Jerome stepped to that plate with his bat, with the helmet pulled down, staring down the pitcher, and then look what happens. 20x'd it. See what happens. I'll go ahead and spoil it a little bit for you. You're talking about almost a 5% swing in less than an hour. Okay, this man, he has a gift, right? He has a gift. And so check this out right here. And obviously we've been sitting here on this trend line on the QQQ forever, right? I mean, it's been bouncing. Finally, as you can see, we've looked into it, actually broke that today. We've had this happen one other time, so to see if this is a false breakout or not tomorrow. And you look on the minute chart right here, you can see it just kind of bouncing off everything. And then if we zoom in right here, you can see it right there. So it is above that descending trend line. We'll see if this is a breakout, of course, tomorrow to try to confirm this over the next couple of days. And this is basically what was said, right? Here's the release. I'll put the highlights, sent it out to everybody. The Fed has decided to raise rates by 0.25%, between 0.25% and 0.5%. They're looking at basically doing 7 rate hikes, what they're looking at for the rest of the year. And they'll have the medium of 1.9% Fed's funds rate by the end of 2022, 2.8% by 2023. I got money says we never even get close to that number. Then you got Fed sees inflation for 2022 coming in at a modest 4.3%. And for 2023 coming in at 2.7%. So big decrease there. And then you got the Fed sees GDP decreasing for 2022 is going to come in at 2.8%, but then it's going to decrease again, 2023 at 2.2%, and then 2024 is going to decrease even more, which I guess everybody thinks is a good thing. And on Twitter, I sent this stuff out and said, hey, since they've been, off by a country mile on these projections, why don't we all put our projections out there for the year end? What do you think GDP is going to come in at for 2022 at year end? Put it in the comments. I'm going to go ahead and just throw mine out there. I think it's going to be at least 5.3%. That's what I'm going to go ahead and guess. Put yours in the comments. So now going into when this release happened at 2 o'clock, check this 20x sped up chart up here. It takes seconds to see this. And, this is what or how the market reacted to the release of the information that basically I just sent out to you guys. And this is the minute chart, and you can see it started to run up right before the release, and as soon as that release hit, boom, nothing but red, baby. Wait a minute, the bull said we ain't gonna let you push us below it, and the bear said, man, get out of here, we got you. Get out of here. Look at this stuff right here. Come on. And they just started pushing and pushing and pushing. Forget those calls you had. You forget about it. You should have bought puts, they're saying. The bull's saying, I'm going to get my call. I'm going to put it in the money. Nope. Just can't do it. Got expirations coming up Friday here on these options. I got to make my money. And the bear said, nope, we're going to push it down. This information sucks. You got to be kidding me. 7 rate hikes. GDP slowing over the next 3 years. They're going to start running off the balance sheet, flooding the bond market. Are you kidding me? We can't let this happen. Come on, guys. There's no way. Never in the history of this country have we ever done 7 rate hikes in 1 year starting out the gate, plus ran off a $9 trillion balance sheet. That's insane. We can't let this happen. And nope, the bulls say we're going to be coming back up. Here we go. Ain't going to let you push us down. By the way, that was a 2% drop in less than a matter of like 10 minutes. But then the man steps to the plate, ready to hit a home run. And Jerome starts to speak, and man, the market likes being talked too dirty because this silver-tongued fox steps up there, and he's like, yep, we're going to do 7 rate hikes. And they go, 7 rate hikes? Can we do 8? Can we do 9? No, we're just going to do 7. Don't worry about it. Just 7, guys. Come on now. And they're like, oh, we love it, man. Talk to us. Talk to us about that balance sheet. Oh, yeah, we're going to run it off. Yeah, we're going to run it off by 800 billion. Yeah, that's a guess, of course. But yeah, we're going to start running that balance sheet off coming up soon. Oh, man, we love it. You're going to start flooding it? Oh, man, taking out all that liquidity? We love it. Let's do this. Let's do this. Come on, why didn't we do this early? Oh, my God, you think GDP is going to slow down over the next couple of years? years. Still high though. Gotta love it. Gotta love it. Yeah, wages are gonna come down. That's right. People ain't gonna be making as much money. Not gonna be making as much money, but they're gonna spend a whole lot more on those groceries, gas, and everything else though, right? We love it, Jerome. Come on, baby. Keep talking to me. Keep talking to me. Oh yeah, we're gonna push it up. Here we go. Here we go. Here we go. Come on, come on, come on, come on. And I figured I'd have a little fun with that because that right there was like a 5% swing in less than an hour, right? I mean, that's an insane turn. Same information he's talking, but it came out on those releases. But when he spits it out of his mouth, I'm telling you, it's smooth as silk. Remember, he ain't confirmed yet. He's still trying to get confirmed, okay? So, and all those guys voted except for one, that was Bullard, for the 0.25% interest rate hike right there. And yeah, I was looking back trying to figure out, I've never seen a time in history to where this much liquidity is going to come out of the market, same way we never saw, how much liquidity was put in the market at that same time. We've never done that before. So now we're doing the opposite, because remember, you're talking about 120 billion a month gone on buying bonds, mortgage-backed securities. Now we're going to start raising interest rates 7 more times. That's going to make it much more expensive, obviously, for people to borrow money, for companies to borrow money. Okay, they're going to start running off that balance sheet. It's $9 trillion. And there's been projections, $800 billion this year, $1 trillion next year. We're just throwing around like it's pennies and nickels, right? Who cares? And so hopefully they'll start helping, get inflation under control. We'll see if the market cares more about inflation or liquidity. But the other thing is, and you see it happening right now, what's happening to oil, right? Started plummeting. But the funny thing is, what's going on with gas prices? They're still going up. Right? The gas prices, they responded fast and went up when oil was going up, but now the oil has plummeted. Gas prices still going up. Is that corporate greed? Is that what we're seeing again? Yeah, but you can see it even more. It's right in your face because their prices are right there in a big old thing right there shining at nighttime, the daytime, right? In the grocery store, you can't really see it. Right? It's plain as day right there on the gas prices. So, the president came out there and said, you better start lowering those gas prices because he sees what's going on. Remember I showed you in the video, was it last week, when oil started going up, and he said, this ain't time for corporate greed. Oh, yes, it is. Oh, yes, it is. Let me tell you. And so we're going to see if that happens because right now, all that data that got ignored this morning on the retail sales, which was disastrous, by the way. People don't even realize that. If you take out like gas, housing, and there's another item out of there, it's got something to do with all this inflation. You would see retail sales overall was like -1% or something like that. Like it was bad. It really was bad. But the market just completely ignored it and roared right out of the gates. Okay. And so, I always go with, what is my favorite question for Jerome Powell at this thing?
I guess my question is this. Are you not give a forecast here that essentially suggests you will be continuing to run further behind the curve and never really get in front of inflation because the economy will continue to run hot? And kind of on a related issue, you said earlier, inflation will take longer to return to price stability than we had originally expected. Isn't that a choice you're making? And if so, why are you making that choice to let inflation run above price stability longer than you'd like?
Right. So if you look, first of all, you're looking at medians, but understand that it's not something we voted on. It's not a plan. But if you look, people do have their by the end of this year, broadly, people are at or close to, or in some cases above, their estimates of longer run neutral interest rate. Okay, so that should stop pushing. That should be a removal of accommodation for monetary policy, basically. At the same time, we will have done significant balance sheet runoff, and you can think of that as further. In the next year, and just looking at the median, you're now above the what people estimate to be the longer run median. So and also in many people's forecasts, that actually amounts to tight policy in real rates as well. So why does unemployment remain at 3.5%? A couple points. One is the connection between in the economy we had before the pandemic, the connection between inflation and the level of the unemployment rate was not very tight. But this is clearly what this is an expectation that really it amounts to the idea that wage increases, which are now running above the level that would be consistent over the long run with 2% inflation, will move back down to levels which are still very attractive, full economy full employment kind of wages, but not to a point where they're pushing up inflation anymore. And as I mentioned, there are a lot of factors causing inflation to come down. And you know, the reality is there are many moving pieces, and we don't know what will actually happen. But no matter what happens, this is a committee that is determined to use its tools to make sure that higher inflation does not become entrenched. And so we are determined on that front, and we'll deal with what comes. This is a modal or most likely expectation, but we'll deal with what comes, whether it's better or worse.
And yes, you will, Jerome. You will deal with it, whether it comes for better or for worse. And so at least they got, you know, a projection of rate hikes, which is actually higher than a lot of people were projecting, right? They will start to run the balance sheet off at some point in time this year. They're going to talk about that in the meeting. And so, and they, you know, like they said, inflation is going to be high. Last year they predicted, you know, transitory will be back to 2% what it was by the end of 2022. Obviously, they're projecting 4.3%, which means it's most likely going to be higher than that. Probably over 5, who knows? Again, put that in the comments. And today we're going to find out, you know, hey, love the green. We're going to find out if that's the real deal, if it's a real breakout, and we're going to start going up, you know, ascending for once, or is this because of quad witching, which is coming Friday? I've done a video on that before. And so, you know, that's where obviously all options expire. And so we're going to find out, you know, what's happening here. So, you know, the market makers like to move things around, do their thing. And so, you know, and not to mention, I mean, obviously you saw what's going on Chinese stocks. I'll put a video about that, I guess, because, I mean, that was just unbelievable. And so I helped drive it up. So we're going to find out, you know, tomorrow, Friday, it's going to be an interesting time. We'll see if we stay above, you know, breaking out of that trend line right there, which would be cool with me. And we'll go from there, guys. So let me know what you're doing down in the comments and everything. You think it's the real deal, or you think we're heading back south even more, fake breakout there? What do you think about Jerome Powell? What do you think about the 7 rate hikes? What do you think about running off the balance sheet? Where do you think we're going? You know, that's what I want to know. And so also let us know what part of the country you're in and if your gas prices are coming down. Okay, so have a good one. I'll see you tomorrow.